That's not science fiction. Webus, Vivopower, and Wellgistics have already jumped on board. If you think crypto is just retail hype, think again. This is institutional playbook material. Keep watching. Welcome to TJ Crypto World, where we dissect the biggest moves reshaping finance. In this deep dive, we'll expose how Webus International, Vivopower, and Wellgistics Health are weaving XRP into their treasury strategies, signaling a seismic shift toward digital asset reserves. Stay glued, because what you learn here could redefine corporate treasuries. Coming up, we'll cover Webus's $300 million XRP reserve plan, filed with the SEC, set to supercharge global payments. Vivopower's bold $121 million allocation, backed by Saudi royalty, transforming energy sector transactions. Wellgistics Health's $50 million XRP injection, streamlining healthcare cash flows in real time. Messari's data-driven insights on why corporations now view XRP as more than speculation. By the end, you'll understand why digital currencies aren't just buzz, they're boardroom essentials. If you're hungry for no BS crypto intelligence, smash like, subscribe, and hit that bell icon now. Let's get into it. 1. XRP's evolution from payments token to treasury asset. 120 to 240, XRP began life as Ripple's answer to sluggish, expensive cross-border rails. Fast forward to 2025, and the narrative has flipped. Now, certificates of deposit and digital bonds are being supplemented, or even supplanted, by XRP in corporate vaults. Why? Because XRP settles in seconds, costs pennies, and offers near-instant liquidity. Treasury teams that once scoffed at crypto's volatility are now rethinking strategy. Why park $100 million in low-yield fiat when you can harness XRP's speed and yield potential? Messari's recent report pinpoints this pivot. Institutions aren't chasing moonshots, they're chasing efficiency, transparency, and predictable settlement. XRP's ledger architecture, built for enterprise-grade performance, checks all those boxes. Let's explore the frontrunners leading this transformation. 2. Webus International's $300 million XRP's reserve, 240 to 420, our first case, Webus International, a publicly traded payment solutions provider on Nasdaq. Earlier this year, Webus filed with the U.S. Securities and Exchange Commission to raise $300 million earmarked for an XRP treasury reserve. This isn't small change. The funding strategy blends existing cash, institutional-backed credit lines, and shareholder guarantees, designed to underpin a robust XRP vault. Why XRP? Webus's CEO emphasized the need for an ultra-fast settlement layer. Cross-border corridors can take days and rack up double-digit percentage fees. By integrating XRP, Webus plans to cut settlement times to seconds, shrink costs to fractional pennies, and guarantee liquidity availability around the globe. That means a small business in Indonesia could receive a payment from a U.S. customer before the afternoon coffee break, no more waiting for correspondent bank clearance. Moreover, Webus intends to embed XRP into its merchant onboarding, allowing merchants to accept digital dollar stablecoins and XRP pairs seamlessly. As demand for borderless commerce explodes, Webus believes its XRP treasury will be a strategic advantage, lowering operational overhead and unlocking new corridors into underserved markets. 3. Vivopower's pioneering $121 million XRP bet, 420 to 540. Next up is Vivopower, a Nasdaq-listed energy infrastructure firm. In a move that stunned analysts, Vivopower allocated $121 million, funded through a private placement led by Prince Abdulaziz bin Turki Abdulaziz Al Saud of Saudi Arabia, to build an XRP-focused enterprise. In other words, Vivopower plans to become one of the world's first companies to hold a core treasury in XRP. In the energy sector, timing is everything. Large-scale projects spanning Africa, Asia, and the Middle East require massive capital flows. Traditional letters of credit and SWIFT transfers can take days and cut into margins. By shifting reserves to XRP, Vivopower expects to complete supplier payments and capital calls in seconds, eliminating FX concerns and slashing fees. The ripple effect? Faster commissioning of solar farms, gas plants, and microgrid installations, translating into sharper competitive advantage in emerging markets. Such a framework would let independent power producers receive immediate payment once generation benchmarks are met, no more waiting for traditional settlement processes. If this model scales, Vivopower could set a blueprint for how commodity-based industries leverage crypto reserves. 4. Wellgistics Health's $50 million XRP integration, 540 to 650, Healthcare often lags behind finance and tech adoption, but Wellgistics Health is rewriting that script. This publicly traded healthcare logistics and technology provider recently secured $50 million to weave XRP into its treasury management. Wellgistics aims to use XRP not just as a speculative asset, but as a real-time payment mechanism, streamlining reimbursements, vendor payouts, and supply chain financing. Imagine a medical clinic ordering supplies from a global distributor. Under the old model, payment might clear in 3 business days, with fees and FX taking a bite out of the clinic's budget. By routing funds through XRP, Wellgistics can settle immediately, guaranteeing the clinic receives supplies the next day, and at a fraction of the cost. The company also plans to launch a patient-centered app, allowing seamless micropayments for telehealth consultations via XRP. Insurance reimbursements can be paid instantly, and patients avoid hefty transaction fees. In a sector where margins are tight and speed can be a matter of life or death, Wellgistics' XRP reserve could redefine healthcare efficiency. 5. Messari's insight, XRP's institutional ascendancy, 650 to 750. So, what does the data say? Messari, a top-tier crypto research firm, highlights that corporate adoption of XRP as a treasury reserve asset isn't anecdotal, it's a rising trend. Their analysis shows higher institutional inflows into XRP wallets, coinciding with announcements from Webus, Vivopower, and Wellgistics. On-chain metrics revealing large, sustained transactions, often millions of dollars, flowing into exchange escrow wallets, indicating accumulation rather than short-term trading. Sentiment shifts among chief financial officers and treasurers in surveys, who now rank settlement speed and cost efficiency as primary drivers for digital asset integration, areas where XRP excels. In plain terms, Messari's numbers confirm that these experiments aren't vanity plays. They reflect a fundamental rethinking of how large enterprises allocate idle cash. Instead of 0% fiat deposits, a portion of capital is now parked in a digital asset engineered for speed and liquidity. 6. Broader implications, redefining treasury management, 750 to 850, with marquee names leading, expect a domino effect. Companies across sectors, logistics, manufacturing, hospitality, won't want to be left behind. Treasury teams will benchmark themselves against these early adopters. Can we replicate Webus's cost savings on international transactions? Should we pilot an XRP reserve to fund overseas affiliate operations? How can we integrate digital dollar stablecoins and XRP pairs into our cash management systems? Regulators are watching closely too. As these corporate pilots succeed, regulatory frameworks will have to evolve, crafting guidelines for digital asset reserves, collateralization models, and independent audits of on-chain holdings. The next few years are poised to reshape how boards of directors perceive cash and equivalents on balance sheets. If you're ready for the era of corporate crypto treasuries, hit like, subscribe, and share your take. Which company's XRP strategy excites you most, Webus, Vivopower, or Wellgistics? Let's hear your thoughts down below. Vivopower and Wellgistics are proving that XRP isn't just a speculative play, it's a strategic treasury instrument. As more institutions follow their lead, digital currencies will become woven into corporate finance. Thanks for tuning into TJ Crypto World. If you found this deep dive valuable, check out our other videos on institutional crypto adoption. Until next time, stay informed, stay vigilant, and keep your portfolios ahead of the curve.